Okay, Market Timing Academy here with your weekly stock analysis. Today is November 9th, and we're going to take a look at a company called VmWare today. The symbol is VMW. Now, as we all know, there's a big trend in corporate America to go toward cloud computing or virtualization of your computer systems, and VmWare is one of the companies that will benefit from that trend. Now, without going into the details, VM provides software to partition computers into multiple virtual servers or desktops. Now, virtualization programs are used heavily in cloud computing applications. VmWare is one of the leaders in that industry, and as a result, the stock has done very well. Now, we're taking a look at the daily chart. You've got the candlestick chart of VmWare. You've got a 50-day moving average, a 200-day moving average. You've got the volume indicator and the MACD indicator. So let's take a look at how we would trade this stock, as the company fits all of our fundamental criteria with an ever-changing industry. Now, you can see here over the past year, this stock has been in clearly a very strong uptrend. And what we're looking at right now is a basing pattern, which is showing us some areas that we might be able to identify a potential buy candidate here, which we believe that we have that. So let's go ahead and hone in on this area right through here. Now, this is what is starting to look like a cup-shaped base, as you can see going through this area. Now, what I want you to note, though, is that the stock broke out of its or above its 50-day moving average, which is a very bullish sign and an indicator to us that we have a stock that's a good potential buy candidate. And you can see that that stock did that move on very strong volume through here. And then also we have another positive element, which is a crossover in the MACD, as well as the MACD is starting to come through to the zero line, which is another bullish signal. So bottom line, we've got a buy candidate right here at $80 a share. We think you can enter this trade right at this point. Your stop would be roughly $78 a share, so you have very limited downside in this, roughly 2.5–3%. But again, the thought process is you've got a stock that's clearly on the right side of a cup-shaped base. It's broken above its 50-day moving average, which is a point of resistance. That point now becomes support. What we would suggest that you do is you buy half the position that you anticipate owning in this stock right at this level. Keep your stop tight so you don't make any mistakes or let a mistake become out of proportion to your portfolio. And then second, watch this stock as it climbs back through the right side of the base, and your second buy point would be as it crosses back through the point of resistance or the beginning of the base, which would be roughly $88 a share here. So again, you've got a stock that is benefiting from a trend in the technology industry of cloud computing and people becoming more virtual. You've got a stock that's made a strong run, that's gone through a good solid base. It's breaking above its 50-day moving average, which gives you a good level of support. So go ahead and buy half your position now, ride it, and then if it breaks through the other end of resistance here, which is the beginning of the cup-shaped base, and it does so on good volume in the future, I would add to that position. So this is the Market Timing Academy, your weekly stock analysis featuring VmWare. If you'd like to learn more about how we can help you trade this crazy market, go ahead and visit www.markettimingacademy.com.